coins and teddy bears when your baby is born, you should be starting an investment for them from day one. That's what our next guest says, and he has 5 ways parents can help their kids invest for the future. Please welcome finance expert Dale Gillham to Studio 10. Nice to see you, Dave. All right, so what do you think we should be investing in? Is it gold ingots, gold bullion? Is it, shares, stocks? What?
To me, it's shares, especially younger people with shares. I mean, we only know that the millennials, that they're all going, I can't afford property, so what do I do?
Yeah.
But it doesn't mean you don't invest. And the problem is a lot of people shy away from the share market because they don't understand it. They think it's so mysterious. They think, oh, it's all best left for the professionals like me. But I'm here to tell you that everybody can do it. And children are great at it because they don't have all the hang-ups that us adults have. They don't have all that biases. They just go, oh, that looks like a great company. How about I buy that? And so starting them young really, really does help them. And the parents that are talking to them when they're young, in secondary school from the start there and really talking to them about stocks and understanding the market, by the time they're 18 getting their job, they're well on their way.
Well, how much do you have to realistically have to make an initial investment on the stock market? I mean, we're not talking $100 of tooth fairy money put away.
Well, you're not. No, $100, when you're talking about brokerage now is getting a lot cheaper. It used to be when I first started, it was $70, $100 every time you bought and sold. Nowadays, it's $15, $16. So really, I say to people, $1,000 minimum, but you can do a $500 and just start buying the biggest stocks on the marketplace. It is really it's a no-brainer.
So if you've got $100 worth of tooth fairy money, it's a lot of teeth. All of them have fallen out. So do you buy one CommBank share for $78, or do you buy some smaller sort of $2 shares?
You're better off buying the bigger shares, and this is one of those misconceptions, is that a stock price being a lower price, being $1, is a better value than a $30, $40 stock. And that's one of the big misconceptions that Australians tend to have. It's a $30 stock is a $30 stock because it's a better stock.
Right.
A $1 stock doesn't have the management, it doesn't have the profits going through it, and it's a lot more speculative. So, yeah, you might if you've got 10 stocks, you might make one of them a $1 stock. But the rest, it should be your top 10, your top 20 stocks, because they're going to deliver dividends, they're going to be real steady, they're not going to give you a heart attack in the middle of the night going, oh, it's fallen out of bed. CommBank's not going to go broke.
And what sort of return can you get on stocks and shares compared with, say, a long-term savings account?
That's, again, no-brainer. My Commonwealth Bank, you're going to get 4 to 7% tax paid. You put your money in a Commonwealth Bank savings account, you're getting, what, 2%?
Right.
It's a no-brainer.
So, in fact, you're always better being a Commonwealth Bank investor than a customer.
Absolutely.
I suppose
or any bank for that matter.
That's exactly right. But I suppose this generation in particular has got the global financial crisis fresh in their minds. They're thinking, well, at least in a bank, I know my money is safe.
Correct.
What are the tricks to avoid exposing yourself to losing the lot in one day because you backed the wrong horse?
Well, the thing is, that will never happen. Not when you're buying good quality stocks. Any stocks in the top 100 shares on the Australian market, they don't go broke in a day. It just doesn't happen.
I mean, someone who bought AMP shares even just a year or two ago would not be very happy right now, and that was what's considered the safest of blue chip stocks.
Well, you'd say, yeah, it was a blue chip stock, or still is a blue chip stock, but I've never had anybody ring me with the share they own going up in price that they're worried about. It's only going down in price that they really worry about it. And so what I teach people, both traders and investors, is always have an exit strategy. And the exit strategy I teach in my students and in my book is just 15%. If you buy a stock that's, say, $10, just calculate 15%. You can do that in your head. So that's $8.50. If it falls below $8.50, just get out.
Get out.
And because if you don't lose the money, you don't have to make it up on the other side. So if I don't lose 10%, I don't have to make 11%.
So are we buying shares for our kids? That's your share, you put it away and you forget about it, and the kid opens a parcel when they're 30 and goes, oh, look what I've got. Or are we day trading them?
Yeah.
No, you can do exactly what you said, because if let's say you have a newborn child, and people often get money for newborn child, from family, friends, all that sort of stuff.
You're not supposed to sell them.
You're not supposed to sell them. Correct. But if you put that money into the top 10 stocks on the Australian market and sat it there and didn't do anything other than reinvest the dividends, didn't even look at it, by the time that child turns 21, they'll have a lot of money.
Right.
They'll have a lot of money. And you can do that if you're a little bit more active in your approach by looking at them every few months. And this is where I suggest involve the kids. Say, here's your portfolio, let's look at your stocks, let's have a look at them, and let's look at the companies. You know, you could be driving around and you go, oh, there's Domino's Pizzas. Oh, they're on the stock exchange. Let's have a look at that. Harvey Norman, those sorts of things.
So invest in the world around them so that they have a connection to it. So I should be buying shares in Fortnite or Minecraft or anything else my kids are obsessed with.
Lego, can we invest in Lego?
That's right. My wife and I had 2 kids, and after they were born, she got a whole bunch of money and invested it in a contraceptive company.
You've got some great tips to share as well, Dale. Let's have a look at those now. Match your kids dollar for dollar. So if they invest, you invest. Buy companies that they know. Start the conversation early. It's a great way to build financial literacy, isn't it? Give them shares as a present and play a game with a reward. All really good advice and great tips there. Dale Gillham, thank you so much. And where can people get your book?
All good bookstores. It's in the bookstores at the moment. I bought this one for Joe because last time I was here talking about credit cards and he said he was going to use his credit card to buy it. I don't want him to go into debt, so that's
that's right. I'm just using Afterpay these days, so that's fine.
Thank you, Dale. Good job. Thank you so much.